We talked to one group where their front desk was told, make sure you go ahead and scan in all of the checks and then upload it into this file and then print everything. And so the front desk staff was doing that. And it turns out they weren't using the check scanner. They were scanning and then shredding live checks.
Oh,
and so
okay.
was following the process that they thought was being told to them, but there was a miscommunication.
They missed the part where they needed to, which scanner am I supposed to use? Oh my goodness,
Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice.
Hello, everyone, and welcome to Medical Money Matters. I am joined today by Sasha King, who is the CEO and co-founder of Anatomy, a company that is focused on solving one of the most persistent and also overlooked challenges in healthcare operations, which is how money actually moves through a practice. Through Anatomy's lockbox solution, Sasha and her team are helping medical groups automate bank deposits, strengthen internal controls, and bring much-needed clarity to the reconciliation process. In a space where manual workflows and fragmented systems can quietly create risk, inefficiency, and lost revenue, her work is about creating structure you can trust without adding complexity. And what I find especially compelling about Sasha's approach is that she doesn't just focus on the financial mechanics, she understands the operational and human implications behind them. When reconciliation is clear and controls are strong, teams function better, leaders have better data, and organizations can make decisions with confidence instead of hesitation. So in today's conversation, we're going to explore what it takes to build financial infrastructure that supports a healthy, scalable medical practice, and why getting this piece right is more foundational than most leaders realize. So Sasha, welcome to the podcast.
Thank you so much for having me, Jill.
I'm delighted that you're here. This is a conversation I've been looking forward to for a while. I probably confessed to the audience that we have here that I started my professional career as an auditor and segued into healthcare about 34 years ago, just a few minutes ago. And I have always been enamored with a good reconciliation process. And I'm so delighted that you have brought this solution to the market. So I'm really excited to talk about it with you today. And I would say, to begin, reconciliation is one of those unseen processes, like it's a little bit invisible. And so I wonder why you think so many medical groups really underestimate its importance until there's some kind of problem.
That's a great question there, Jill. And I will say, I think a big part of the reason why reconciliation isn't more commonly done is because it is such a painful process. And so it's the difficulty of doing it that lends to folks not doing it, not the lack of importance of doing it. And part of what we've seen as the pain point, and my own experience in seeing this pain point, is that banks don't integrate with practice management systems. And in a world where you see somebody one day, you see patients one day, and then 2 months later, a $20,000 check arrives in your mailbox from United for 50 different people that you've seen over the course of months. It's really hard to know, how did you get paid? It's just a very different financial structure than a pizza shop or a toy store where you get paid on the moment that you've given that transaction.
Sell something and you paid. Yeah, that's great. And I should pause here to define for our audience what you and I when we say reconciliation, because I don't want to assume that everybody knows. And I know I shared this with you, Sasha, when we were talking earlier, that reconciliation is the process by where you compare the money that came into your bank account with the money that got posted in your practice management system. And then some groups even go further and say, does that also match what's in our accounting system, QuickBooks or whatever you use for tracking your money into your financial statements? So that's what we're looking at. And I know I shared with you that I've had these conversations over the years with medical groups, and it generally takes a lot of conversation before everybody really understands the importance of making sure all those numbers align. But I'd love to hear from you when you walk into a new environment what are some of the most common reconciliation gaps that you see? And what do you see those gaps costing the practice?
Yeah. And exactly to your point there, Jill, the goal of reconciliation is to say, did you get paid what you should have been paid? And the reality is you have a practice management system that is telling you, here are all of these claims that are getting adjudicated, but you actually get those dollars in your bank account is the entire goal of reconciliation. And so one of the gaps is if you're not running a reconciliation process, you may not be getting paid for some of the claims that you are posting and you think you're getting paid for. Of course, another big pain point behind this is you're actually tracking your accounting in your books. Are all of the dollars that are in your bank account getting accounted for, especially if you're paying out employees or the other providers in your group based on the claims that are in your system? So all of these numbers you want to have match up. What is in your practice management system? What is in your bank? What is in your accounting system? So that everyone is getting paid appropriately and your books are lining up.
Yeah, that's fantastic. And I imagine you see a lot of gaps when you go into practices. And what do you see that costing? There's a cost to all the manual process for sure, but I'm sure you could tell some good stories. We haven't said the E word out loud yet, but I'm sure you could tell some good embezzlement stories.
Well, to your point, one of the biggest gaps that we see, and as you mentioned, part of the reason why at Anatomy we built Lockbox to start is because one of the hardest parts of the reconciliation process is the fact that you get paid by insurance providers in 3 different formats. There can be an electronic payment called an EFT or an ACH, or that would be when you receive a payment directly into your bank account from the insurance payer. But you could also receive a check that arrives in the mail that you then are depositing. And then you could also receive a virtual credit card that you are keying into your merchant system that you have in your office. And so these are 3 different forms of payments. And so one of the gaps we often find is there may be groups that they're tracking the electronic payments, but the checks and the virtual cards, those get grouped up. And so it's very hard to really know what you got paid for. And so that was a big part of the reason we started with a lockbox, so you can get the hardest part of those payments normalized and digitized in the same way as an electronic payment. But we often see that as one of the first gaps. Those checks that may be sitting on a desk for a couple of weeks, making sure those actually get deposited, the virtual cards, making sure those don't get lost as part of the papers that are coming through. And some of the gaps and stories that we often find are groups that maybe didn't deposit checks or find a drawer full of checks or find a set of EOBs that had virtual cards that just never got deposited. And those sometimes are the missing funds. It's that last 10 or 20% of payments that are harder to track than an electronic payment.
Yes. Yeah. And we're saying it's like the last 10 or 20%. That's a significant amount of money for most practices. It feels, there's just a little bit that doesn't come electronically anymore. But those are also areas where it's ripe for somebody, if they're interested in taking money out of the practice, an employee that's going to embezzle. That's the risk for groups that don't reconcile, is that either they just honestly don't get paid. The money never showed up. And we've seen a lot of examples of that over the years where the EOB, the electronic explanation of benefits, comes in. And so your billing team is posting those payments into your practice management system as though you did get paid. But if there's not that corresponding check with the bank to make sure the cash actually landed there, I don't know. I don't know too many people that thoroughly trust the insurance companies to make sure they did what they said they did. But
so interesting. To your point on stories, we hear so many interesting ones as we work with groups here at Anatomy. I think, I'll give you one funny one. And it can be truly good intentions. We'll talk as well about where there could be issues like embezzlement or fraud, which you want to make sure you capture. But even the best intentions can be there. We worked with one group where, to your point, they weren't doing a reconciliation process, but they felt like something was off. They weren't getting all the funds that they thought they should have been getting. And to your point, there's that last 10, 20%. It's not a small amount, but it's enough to get missed. And the reality is there's just enough paper coming through because of secondary insurance or out-of-network payments that come back on checks or workers' comp that comes back that way that it may get missed in your processes. We talked to one group where their front desk was told, make sure you go ahead and scan in all of the checks and then upload it into this file and then shred everything. And so the front desk staff was doing that. And it turns out they weren't using the check scanner. They were scanning and then shredding live checks.
Oh,
and so
okay.
was following the process that they thought was being told to them, but
Yeah.
there was a
They missed
miscommunication
the
and
part where they needed to, which scanner am I supposed to use? Oh my goodness. Yeah.
so,
Yeah.
it can even be good intentions in place, and unless you're truly reconciling and saying, hey, I have this claim, and before I post it, I want to make sure that payment is in my bank account. That's where you can end up getting a miss in your revenue.
Yeah. Yeah. And I love that you brought up the virtual credit cards. And I'd love to just take a tangent for a minute on that one. We generally recommend our clients don't accept those. And I look at it from a mathematical perspective. First of all, it makes your reconciliation. There's another line item in there, the things you got to match up. And the credit card vendor will obviously take their 2 or 3% off the top of that. So then you're trying to reconcile and you're off by $2.47 of what your payment was. And so that's challenging for reconciliation. And then also, why should you pay another couple, 2, 3 cents on every dollar to get your money? We routinely recommend our clients call or fill out whatever paperwork you need to fill out so you're not getting those electronic credit cards. But, and to your point, they're very easy to put in a stack of paper and get lost on somebody's desk or in a file or whatever. Yeah, there's so many different ways. And it really is a complex process. So I'm really glad you're making it simpler. And I'm curious, for our audience, talk a little bit about how physician leaders should think about reconciliation and what their role should be in oversight.
Yeah, great question. I would say, as the physician leader of a practice or CEO of a practice or CFO of a practice, you would be looking more at hopefully the metrics or the reporting that you want the group to put out for you. One thing that I used to always build in my previous lives and that we built into Anatomy is a waterfall chart. You want to see, here is the amount of payments in my bank account for the last month from insurance providers. And here is what I saw posted in my practice management system. I think there's 2 ways to get that to be even. You can either run a daily reconciliation process where you only post funded claims. So you say, I'm only going to post this claim after I know the deposit is in my bank account. So that's one process that we see groups run. And then you have that data as a physician owner or an owner of a practice. On the other side, you might be doing more of a month-end reconciliation process, in which case you would want to see that waterfall. Here's what's in my bank. Here's what's in my practice management system. Of the funds that came into my bank account, let's say I received $100,000 this month, I would want to know that 75,000 was matched and posted this month, maybe another 20,000. The payment came today in April, but the remittance came in March. And then another 5,000 is unmatched. And so I would label that as unrecognized revenue for now. And you hold that over and you're continuing to track that. And that way you have those 3 kind of buckets that you're thinking about at the end of every month. And you track that sort of month over month.
That's great. And I would say for physicians, we'll get into a little more, I'm sure, but we're talking about embezzlement, which is another thing. Reconciliation doesn't get discussed much. I think it fits into that ethereal category of internal controls, which also don't get discussed much. And that's what you put in place as an owner to prevent embezzlement, which also doesn't get discussed much. So it's always like all these topics are just under the radar. So I'm extra glad that we're having this conversation today. But I think frequently for physicians, when they think about oversight of a process that is financial and therefore a foreign language, that we don't teach any finance in medical school. So I often say to physicians, I'm not sure how any of us should expect that all this stuff. When we ask you to have oversight over a process, how we would expect that you would know what to look for or that you would know when something's amiss. But I'd love to hear from you about maybe another real world example. I love and I cringe the one with the scanner and the shredding of the live checks before the deposit. Maybe another real world example where poor reconciliation led to a significant financial issue.
And to your point on the embezzlement side, or even, again, just good-natured mistakes that can happen. I know I talked about the payment side of reconciliation. Of course, the other side of that is also tracking all of your remittances. And I would say on the other side of it, and not necessarily a specific example, but what I would almost give as the best practice that we see out there. So at a large organization, one way we often see groups managing a reconciliation process to ensure that every day all of your claims that are closing out are tied to bank deposits, is that a lot of groups will run a process where they download. In fact, this is what I used to do, is we would download the transaction list from your bank account. And that is the list of what you post in your practice management system every day.
Got it.
So that way you ensure that anything that is posted is confirmed in your bank account.
Yeah.
That does mean you're going to end up with more claims that are unposted inside of your practice management system. But it also means that you won't end up with claims that are posted that you think you've been paid for, but it turns out maybe something happened to that check. Again, good natured or not.
Yeah.
Those are the two ways, or maybe the best practice that we've seen that I would share back as we work with groups. And we've seen a lot of groups that sort of put a process in place to make sure that everything is really tracking.
Yep.
Now, the reason a lot of groups don't do that is because it's a lot of work to go through this list and post off of it. And that's a lot of what we built Anatomy to help automate. But I also would just highlight you can do that in a more manual way. And something we would recommend is probably the best practice is only post after deposits come into the bank account.
Yeah, absolutely. And I'm so delighted that our revenue cycle team gets to use Anatomy and they love it. So it's so much fun. Years ago, before you created Anatomy, I recall we had a large foot and ankle surgery group. And our director of revenue cycle had a very large spreadsheet, and she would spend hours getting that lined up because there were many millions of dollars going through that account. So it was like there was a lot to track. And I recall walking in and I would just see the big spreadsheet up on her screen and I'd say, okay, I'll come back later because I know what you're in the middle of. Yeah.
Color
Oh, yeah. All that. And with cool little formulas that showed if something was off. And yeah, so it can be quite elaborate. Doesn't need to be, but it can be. And yeah, that was an instance of a practice that absolutely was the size and sophistication that needed to be doing a daily reconciliation. So I'd love to hear your thoughts a little bit on how you help practices determine how often they should reconcile.
Yeah, so I will say the best practice is to do a daily reconciliation where essentially you post everything that's come into your bank account for that day. That would be the best practice, is tracking off on the payments that are coming in. And that way, part of the process should be if you don't have a payment for a remittance that you received, those are the things that you should be following up on. Maybe following up with those payers and saying, hey, I never received that payment. And of course, vice versa. When you have a payment and then you're trying to post it, you don't see that remittance. Those are the ones you would want to go and capture. That would be the best practice. And ideally, that happens across any size group. I would say if that is outside of the day-to-day workflows, a monthly reconciliation process is also a good option, right? Where basically at the end of each month, you would essentially do that in whole, right? You would do the same thing. You're looking at a month of transactions and you're still tracking off one-to-one and more marking off and highlighting, okay, here are the 20 things that I need to follow up on.
Yeah. We worked with some smaller groups that do it weekly. I agree with you that daily is definitely best practice because when you find something and you're a smaller group, the daily reconciliation process shouldn't take long because there's not a huge volume of transactions. But yeah, it's much nicer to follow up in the moment when you find the thing that isn't reconciling. And yeah, that's fantastic. How about, I know a lot of groups, when I talk to them, seem to rely on the reports from their clearinghouses. And I wonder if you could talk a little bit about that. And let me make sure everybody in our audience gets that when your clinic generates a claim, it does not go directly to the insurance company. It goes through another entity called the clearinghouse. And in most cases, that's required. And that is, I think the clearinghouse's job is basically to make sure that the formatting of the electronic claim is appropriate and so that it will be accepted at the insurance company and not rejected at the front door. And there's a lot of reporting out of that platform too. So I'd love to hear your thoughts about the clearinghouse reports.
I'm so glad you bring that up because I think sometimes that is where there is confusion with groups that we work with as well, because you see a dollar amount that comes out of the clearinghouse or a dollar amount in your practice management system because they're tracking, again, the electronic claims that are coming back through. And so the claims that are adjudicating inside of your system might say, you have earned $5,000 today of claims, right? But the reality is those are not actual dollars in your bank account. And so what's missing from those reports is the actual payment into your bank. And that is why there is a bank reconciliation process that you would want to run, which is confirming here are the payments in my bank account compared to that list that you might be seeing in your clearinghouse or the reporting that is in your clearinghouse. Think of your clearinghouse as your claims system of record, and your bank is your payment system of record. And that is oftentimes why this is such a complex process and is where we've built Anatomy to really solve that missed gap of pulling that data together.
Oh, yeah. I imagine, and it would be fun to do a little bit of a case study, but I imagine use of your solution likely helps groups recoup hundreds of thousands, if not millions of dollars, just with all the complexity that we have in our system. So that would be fun. Actually, just start adding it up. Like, how much have we actually helped save or helped to recoup? There's just so many places where money can leak out of the average medical practice. And if it doesn't get followed up, it's on the practice to follow up. The payers very rarely come back and say, oops, we made a mistake. Here's your money. They'll wait for you to ask for it. Thinking about all of the complexity with all these various places where money can leak out of a practice, I have conversations with groups where I start talking about internal controls like reconciliation, and I can see the eyes glaze over. There's way too much for me to think about, and you're speaking to me in a foreign language, and you want me to do what in my practice? So there's this really a sense of overwhelm. So I wonder if you could give us like a simple starting point, like what would be a minimum viable reconciliation process that a group could implement that would help them get some clarity?
I love the idea of how can you get started, because to your point, it can feel like a big jump. The way I would start is with take your last month of bank transactions. You do a one-time audit, let's call it that, right? So think of it as a one-time audit, whether you take your last month or your last quarter of bank deposits, and also the last quarter or month of your claims from your practice management system. So pull those two reports and do a comparison. And I think you're going to get a pretty good idea. You might see that it's off by a certain percent. Is that 2% or is it 20%? Something like that might give you at least some indication as to how big of a need this might be in your own practice. I think we find a lot of groups where you're off by a few dollars, which that's frustrating in itself. But I think if you find you're off by, thousands of dollars, that might tell you that there's something that you'd want to look at more urgently. And this might be something that is a bit of a smoke that you'd want to go check up on. So I would do that.
Yeah, that's fantastic advice. I love it. And I'm glad you brought up this notion of like, how far off are you? We've had, I know, at least one and maybe two episodes previously about the notion of scope, which for an auditor is like, how big is the dollar amount before you care about it? And I think our previous episode was like, what's your scope as a physician owner and why you don't care about $500? Because that is not enough money in any medical practice for anybody to get excited about. But then we flip that over to a personal financial setting. If you were missing $500, you'd probably be concerned about that out of your personal checking account. Oh, where'd that go? But at the practice level and as an owner, when you're overseeing something that likely has hundreds of thousands and millions of dollars flowing through it, you can't get excited about $500. But to your point, if your reconciliation is off by a few dollars, that is frustrating because it shouldn't be off. It should match to the penny, says the old auditor. But we all know that it's probably not gonna. So it's okay. What amount is acceptable to you as a business owner for how far off can you be? Is that number a few dollars? Is that number $1,000? Is it $10,000? Depending on the size of your entity and the number of dollars flowing through, you probably have different levels or different scope for what you care about. But it's a great piece of advice to just get started and then see how far off you are. And if it's $200, that's probably okay. If it's $20,000, it's probably not okay. So somewhere, find your sweet spot for your group and your circumstance and all of that. So that is great advice for the beginners. So now we've talked about the beginning. So now I want to go way over to the other side and talk about the advanced stuff and taking a look ahead, because everybody's talking about AI and automation, RPA, all of that. How do you see those new technologies impacting reconciliation and internal controls, and what would be your advice for practices to prepare for that?
Yeah, great question there. I will say part of the platform that we built at Anatomy is using AI to take what is, I think, the hardest part of reconciliation. I love that it started with the gaps because It's the checks, the virtual cards, the paper EOBs. I often joke you can't use AI on all of that paper mail that is sitting on the front desk. So we can talk about AI all day, but if it's unopened envelopes, nothing's getting to it. So that's the first step is just getting all of that digitized into your systems. And that's part of where we use AI today is we have, as mentioned, our lockbox. We actually work with groups to have all their mail sent to a facility where everything is opened and scanned. So we take it off of the plate of the practice having to open and scan mail. But that's when we use AI to do things like convert paper EOBs into electronic remittances and take all of those checks and virtual cards and help match those up to all of the remittances in your system. And so I see AI playing a role across a lot of different components of practice management and financial management of a practice. But again, I think there's a first step, which is you have to get everything digitized for it to even work.
It's an excellent statement to say all those unopened envelopes sitting on the front desk they're not in your bank account, they're not in your system, they're not anywhere. And need to get those digitized. It amazes me still how much snail mail and faxing our industry still has. And it's really pretty amazing when we consider most others are completely paperless. So it'll take healthcare another decade or so probably to get all the way caught up. But I love what you've created. And I just have to say thank you for the clarity that you bring to the markets. And I want to say for all of our listeners, I want to say we will have Sasha's contact information and information about how you can find her company in our show notes. And so with that, I will ask you one last question. My favorite question for everybody that we talk to is any last pearls of wisdom that you'd like to share with our audience?
First of all, I'm really excited about being on this show because I think you're shining a real light in an area that doesn't get a lot of attention, as you mentioned from the very beginning. And I think anyone who's listening here is probably already further along than the average group that you're already capturing these sort of areas of wisdom. But what I would just highlight here is making sure that you really have a good handle on all of your different control points. And I do think a lot of groups have a better sense of the claims because you're seeing patients come into your door. You have a sense of the claims that are coming back in and having visibility into now, are the dollars also matching up to that? That would be the message I hope everyone walks away with today.
Oh, wonderful. Wonderful. Sasha, thank you so much for sharing all of your expertise with us today. And again, thank you for what you have put out in the market to make life easier for folks.
Thank you, Jill.
Before we wrap up, if today's conversation has you even a little bit curious about how your revenue cycle is actually performing, I want to offer you a very simple place to start. At Healthy Practices, we offer a free revenue cycle vitals check where we take a quick but meaningful look at your key metrics, things like accounts receivable, collection rates, and denial patterns to help you understand where you are and where there may be opportunities. For many practices, that alone is eye-opening. And if those results warrant a deeper dive, we also offer a comprehensive revenue cycle assessment where we take a full, structured look at your systems, workflows, and performance, including your payment velocity. That's where we can really identify what's working, what's not, and exactly how to improve it in a tailored revenue cycle strategic plan. From there, we can support you in a couple of different ways. If your AR needs attention now, we can step in short-term to help clean things up, improve cash flow, and get your revenue cycle back on track. Or if you're ready for a more permanent solution, we can serve as your fully outsourced revenue cycle partner, bringing not just execution, but strategy, visibility, and accountability to the entire process. Because at the end of the day, this isn't just about billing. It's about building a system that supports a healthy, sustainable, and profitable practice. So if you're ready to take a closer look, you can find more information and request your free vitals check at healtheps.com.